Everybody, it's Brian. Hope you're doing well today. It's Tuesday, the 4th of August. So I'm just going to do a quick run through this morning, talk about the things that I talk about the things I'm looking at this morning to prepare for the new market session, things that are on my mind and levels that we'd be willing to trade from. And then we'll let you guys get with it and roll from there. So first things first, looking over here at the forex market, what I'm seeing, the U.S. forex session starts here in about 6 minutes. Coming into the new session, not a whole lot to really choose from. We see the pound has been our weak currency, leading up to the new session. However, if you look at a lot of the pound cross pairs, they've moved pretty considerably already. So the things that have my eye are the stuff that's more here in the middle, and there's a couple actually that have it. So watching the euro, the euro up until just an hour or so ago has been, and it's not been trending stronger, but it's been a decent strong currency in relation to the others up until, like I said, about an hour or so ago. But this euro is interesting, especially when you look at it as compared to the CAD. The CAD's been below the midpoint, seems to be pushing a little bit lower, and that euro CAD, today has only moved 51 pips so far. So its average is into the 100 plus range. So this is interesting to me. We need to see some movement first. I mean, obviously, as the U.S. session gets going, we'd like to see the euro start to push above this midpoint here and diverge to the stronger side as the Canadian keeps pushing weaker. If that occurs, if we get that divergence, if we get maybe even on the open here, if we get a little burst of momentum on this euro pushing stronger, then we could certainly look at that as a potential for the euro versus the CAD to flip over here and start moving to the stronger side. And definitely the range opportunity is there. So that's one that's on my radar. There is that euro CAD. I mean, there's still a few things that aren't there. It's tried it a couple times, but we need to see the volume detail flip on us as well. So ultimately looking for a breakout there. If this euro does open and start to push stronger against the Canadian, the volume detail would eventually flip as well, and probably by the time we got to the top of that breakout box, we'd see the green level for the volume detail. But so right now it's not quite there. But looking at this for future opportunity, we would want to take that into account and see if that's a potential tradable currency. I mean, obviously we're just kind of getting ideas right now leading up to the new session, but that's one that would be on my radar. Next would be the CAD versus the yen. CAD yen, is that an opportunity as well? This one lines up a little bit better already. We've been selling off, and the volume detail does support the continued sell, so we seem to be favoring the sell side when we watch the volume here. And so if this continues on the open, if we get a little pop, a little push stronger on the yen, then we could potentially see this as an opportunity as well. It's only moved 31 pips for the day, and its average is into that mid 60s range. So that the CAD yen is another interesting opportunity here for us. So that'll be another to keep my eye on as we get going for the new session. And the other, honestly, it's kind of strange because we don't really see it as an opportunity that often, is the euro versus the USD. I mean, the euro USD today has only moved 54 pips, and it's typically into that 80 to 90 range. So another potential opportunity here. If that euro ends up, we were looking for it to go stronger against the CAD, but if it ends up flipping and just selling off and diverging to the weaker side, that euro versus the USD, if the USD gets a good push stronger, that could be an opportunity for us as well. So there's a few there to watch and look at as the market session gets going. The big things, the big drivers, of course, are going to be, we need to have divergence. We need to watch the currency strength meter here to see which currencies are actually moving, which one's going stronger, which one's going weaker, right? Which one's being heavily bought, which one's being heavily sold. So we need to see that momentum of let's see if I can do it this way, of currencies diverging from one another. So we want to watch our currencies, see which ones are diverging in opposite directions. And if it's occurring on a currency pairing that has some potential range left in it. So again, I use that range indicator, that average daily range indicator, in order to see how something is currently moved for the day versus how it typically moves. And I want it to be a fraction of that. I mean, if it's moved 90% of its typical range, is there an opportunity for us to be able to play that early morning breakout and take that, potentially get some profit, right? We need to be able to see something that's got momentum, but also has the potential opportunity to continue that momentum for a little bit of a period, so that we can get into a potentially profitable trade. We need to be, we need movement. We also need some level of sustained movement, right? So if we've already moved, not to say that a currency can't exceed its range. That's how an average is made. It's made of times when it goes significantly higher and times when it goes significantly lower. But all in all, that gives us an idea of where things are. If something's significantly beneath its typical range, odds are at some point it's going to return to that. That's just reversion to mean, right? So anyway, got a couple things to watch here. The U.S. session just started, so breakout boxes have been drawn automatically on all of these currencies that we've got. And at this point, for the next few minutes, we don't want to do anything in the first minute of the day. We'll watch and see what's happening here, and if we get some definitive movement, stronger, weaker, currencies, we want to be able to pair those together, and then once we identify which pair we're watching, we want to double check the range to see how much it's moved for the day so far versus what its typical range is, and then also double check the volume detail to make sure that we've got buying and selling occurring excuse me, in the that supports the direction that we'd want to be able to trade. And that's all there is to it. Keep it super simple, right? Moving on over here to the futures market, just having a look at what's going on out here in the futures. We've got S&P had this morning, really wasn't that long ago, a couple hours ago, we saw a pretty big sell-off in the aftermarket hours, in our electronic trading hours. So a bit of a sell-off this morning coming into the new regular trading hours, which will occur here in about an hour and a half, right? So leading up to this, we've got some key levels we're pulling back to. Bias, though, is still long. We have a long bias on the S&P for right now. If this just keeps falling coming into the new session, we may not have a tradable opportunity. Remember, what we're watching for is to determine what the directional bias is, and we can look at that. In this case, we could look at it a 4-hour to see what our, quote, longer term bias is, and it's showing us it's long. And then, look at a 30-minute and see how that's faring as well. Are we long or are we short? And we're just simply judging that bias by where we are with the moving averages. If the short-term moving average is above the longer-term moving average, we have a long bias, and if it crosses it, we have a short bias. Now, remember, if we keep selling off this, though, it's very possible that the short-term bias will conflict with the long-term bias. If that's the case, we don't do anything until those two are in agreement again. But we are coming back to a key level. 3270 has been a pretty good level for us here, and on the 4 hours. So we'll certainly watch and see how price is acting around this as the market session opens. But of course, we don't want to really do anything until we get into regular trading hours. I started to look at the news. I think some of this sell-off had to do with some China tensions. We'll see how the market digests that and what is really going on there. There's always speculation about what's driving a move. And as I've said before, I don't want to say don't pay attention to the news, because we do. We need to know what's going on in the world. But at the same time, getting too caught up in the news and worrying about the whys behind things, you're gonna miss out, and you're gonna let personal bias affect your trading plan. I mean, we're human. There's always going to be personal bias in there, and sometimes that helps us, and sometimes it doesn't. But the long and short of it is, we need to be able to stick to an actual plan and have a quantifiable reason for why we're doing something. Especially not simply out of fear or simply because we think this and this and this is happening in the marketplace. It needs to be something quantifiable. What's the actual reason for why we're trading? And having those quantifiable reasons for trading keeps us out of a lot of trades, which is really good, and allows us to be patient, waiting for our actual plan, to all the pieces of that plan to fall into place before we take an action. The more we do that, the better potential we have for future success, because we're focused on the setup, not focused on the outcome. When we're trading with our gut and we're trading with emotion, we're very focused on the outcome of something versus executing the process. And the process is what gets us long-term results. I know I'm a broken record when I say that, so I'm just going to keep trucking along here. But long and short of this is, right now we do have a long bias on the S&P. It is still long until this 30-minute flips and it conflicts with the 4-hour. We're in a long bias. Right now we're coming back to a key level, which is 3271, 3270, 3271 right here. So, we could be looking to buy off of this. We could be looking to buy off of this key level. Now, if it does break below that, chances are, if it breaks below this level here and stays below this for any period of time, we may see this support level begin to act as resistance for us and look to go short off of that. However, we would be, if we're trading with the trend, trading with the bias, we'd be looking for long trading opportunities, not necessarily short trading opportunities here. So we'd be looking for a bounce off of 3271 as a long trading opportunity. But do keep that in mind. A lot can happen between what we're talking about right now and where the market is an hour and a half from now when the regular trading session begins. You're going to have to reassess when the actual regular trading session begins to see what we're doing, how the market's reacting to this off hours pullback and whatnot. But do keep this level in mind here, 3270. If it does start to rally a bit on the new market session, we can look at 3280 as a breakout area. If we miss the bounce off of 3271, market begins to rally on the regular trading hours open, we could look here at 3280 and watch for a break of this and see if we can't push longer. The other way to do it is the exact process we talk about over and over and over, which is just simply in a long bias like this, watch for price to make lower highs and lower lows, and then trail our entry point off the tops of those previously closed lower highs or lower highs, and then use that lower low as your stop loss point. And this may be a great opportunity for that, especially watching it on a 30-minute or even lower on a 5-minute as we come into that new trading session. But of course, don't do anything until we get under regular trading hours. A lot of these moves happen like this during off hours, and it looks really dramatic, but it's driven by very low volume. So once the actual real volume comes into the marketplace, it can certainly change the directionality. So we'll see what happens there. Crude is flipped over on us. Crude was a short bias yesterday. It is still a short bias on the 4-hour, but here on the 30-minute side, it's flipped over to a long bias. We've got a conflicting bias here on crude for right now. Now, if this stays down here and starts to push down below 40, we'll see the short-term flip and cross under the longer-term moving average here. And at that point, if this does become short bias on the 30-minute, then these two would agree, and we'd be looking for short trading opportunities. As long as the green line is above the red line, as long as we've got the 30-minute bias here is long, then these two conflict and we don't have any trading opportunities. So there's nothing to do on crude until the 30-minute bias is in agreement with the 4-hour bias, right? So there's really not much to worry about there for right now. Gold, we're still in a long bias here. 4-hour is long, 30-minute is a long bias as well. A little bit flat yesterday. We did push above 90, 1995 in the off hours here, but it's pulled back as well on this off trading hours just now. So what we've got is, as far as key levels to watch here, 1990, and just looking through, you can see it here on the shorter term, on the 30-minute. 1990 has been a big level for support and resistance. It was resistance, and then it was support, resistance, support. It's just been a level that's played, a lot of, it's played a role here. So, 1990 has certainly been an area that there's been some indecision around. So here on gold, 1990 could certainly be, a spot to watch. We'll see what happens here. If we stay below it, here, then we could potentially be looking at shorts off of 1990. Which is tough. We obviously wouldn't want to look at short trades because our bias is long, so we want to find long trading opportunities. Unless you're counter trend trading, but we want to look for long trading opportunities. So really, then 1990 becomes that level where if it breaks above it, we'd want to see 1990 retested, and that would be our entry point here. Is 1990. If we're looking for a breakout trade, then obviously breaks above 1995. Would be the spot to watch for. So if it pushes above 1995, that'd be your entry point on a long breakout. But of course, the bias is long, 4 hours long, 30 minutes long, and we'd have to see where that takes us. Of course, again, we want to wait for volume to come into the marketplace. If you are looking for reversals, on any of these, like I've said before, we always talk about trading with the trend, which I feel like over the long term, it's the best way to go. It's the easiest way to go for beginning traders out there. It's the way that lets you trade without getting a lot of emotion into it, because we're just simply going with the flow, going with that flow of water, hopping on that moving locomotive, being the flea on the back of the elephant. We're not trying to change directions of these things. Like I've said before, you jump out in front of a train, chances are, unless you take a really calculated risk and that train is slowing down and about to stop, then you jump in front of it, you've got a better opportunity than if you just simply see a moving locomotive and you jump out in front of it. You're going to get flattened unless you've got a really good plan and take some very calculated risks. Now, with that said, you can be contrarian. You certainly can trade counter trend, but have that plan in advance. So if you're looking at counter trend, 2000, gold at 2000 is a big key level. It's a whole number, it's a key level. 2000 would be a great spot to look at potential reversals. On the S&P, 3300, it would be a great spot to look at reversals if it gets up there. If you can get that high, you might even park it at 32.99. But with that said, just because that's a key level, and just because it's a big whole number, and just because there's typically some action around that, it doesn't mean that anything will happen, right? You're simply taking a calculated risk, and you're saying, hey, this is, a point if it gets here, it could be a fairly exhausted move, and I would want to take a calculated risk to say if it gets up to that level, even though the trend is long, even though this moving locomotive is moving, in this one direction, I'll take a calculated risk and get in front of it and see if it's not going to reverse from there. Whether you calculated risk, though, have a stop loss. I can't stress that enough. I can't tell you how often. And I guess it's human emotion. I mean, I've done it myself. Anyway, any trader that says they haven't is lying to you. But I see it all the time of folks going, man, I was certain it was going to reverse here, and they throw a trade on with no stop loss. That's the recipe for disaster. So if you're going to jump in front of that moving locomotive, and you're going to be a counter, a contrarian or a counter trend trader, whatever you want to call it, and you're going to place that sell order in the face of this big buy move, right? This big long move, and you're going to sell at the top of that. Nothing wrong with that. But use a smaller percentage of your account and place a stop loss. So if that locomotive, that train does keep moving, or that elephant doesn't change direction, you're not going to just get totally squashed, flattened, blown out, right? So I implore you, use a stop loss if you're going to be counter trend trading. But there's nothing wrong with counter trend trading. And you should use a stop loss no matter what. Even if you're trading with the trend, use a stop loss, because as we know, even intraday, trends are going to reverse. Trends change. They don't go that direction forever. So we should always be using a stop loss. But especially if you're being contrarian, there's other ways to go about it. You could go in with a smaller percentage of your account on that initial turn if you're trying to call that top. And then if the trade does catch that top and starts moving in your favor, you can scale in on the way down. You can scale into your trades and build your position as that trade is moving in your favor, versus trying to put it all on the line at one spot right there. So anyway, I probably hammered that to death, but I think it's important to talk about because I haven't talked about counter trend trades very much. I've been focusing just on trend trading, which I feel like is the easiest for anyone that's just starting out to get into. And even if you're not just starting out, because so many traders aren't just starting out, but they haven't been successful, and it's because they haven't had a plan and they haven't executed that plan consistently and very well. And it's because we as traders are always kind of drawn to that next shiny object. But anyway, have a plan, stick to the plan, focus on your plan, focus on your process. The results will get there in the long run. All right, so that's it for me. Have a great day. If we've got some trades that stack up today, we'll post them just like we did yesterday. So we had a couple things that occurred. We had tradable opportunities. The indicator that we put into TradingView is working beautifully. It's doing exactly what it should do. I did find a bug yesterday, which was the first time it's popped up. So I've got that into the programmer. Hopefully in the next day or so, he'll be able to get some new code back to me. As soon as I get the new code back and test it, I'm going to publish that indicator for you guys so that you've got it. Because I really want you guys to start using it, and hopefully that takes a little bit of the, I don't know what word I'm looking for, stress out of it, because I feel like it's a great way to trade, and this gives you very definitive signals of what to do, and you don't have to sit there in front of your charts all day watching it. You can set alerts on TradingView and have it tell you what to do, when to do it. So, all right, that is it. I haven't talked about crypto in a few days. I don't even have the charts up right now to do it. So we'll hit crypto tomorrow, see what's going on out there and what actions we can be looking at. All right, so that's it for me. Have a great day, and I'll talk to you soon. Bye.